Biggest names in banking are convening here in New York City for Goldman Sachs' annual financial services conference. Been a busy week already, including Ares Management co-founder and CEO Michael Arougheti, who joins us now with Leslie Picker. Hey, Leslie.
Hey, Carl. Thank you. And thank you, Michael.
Hey, Leslie. It's good to be here.
Good to have you. So your stock was up about 7% yesterday on the inclusion into the S&P 500. What do you think that moment says about Ares and the industry in which you sit?
You know, it was such a wonderful day. We thought we were going to get in on Friday, and then we didn't. So we all went home for the weekend and said, okay, it wasn't meant to be. We'll get them next time. And then all of a sudden it happened on Monday. So the way we experienced it was just really natural and organic. I can't tell you the outpouring of support that we got when that happened from our clients, investors, banking partners, and employees, because what it says is, it's a real milestone for any company. We started our company 30 years ago as a small partnership. So to hit that milestone on the backs of some pretty incredible growth over the last decade plus was just, I think, an indication of the success that we've had, but also, to your question, just the alternative investment landscape is now sizable, scaled, global, and growing.
And your stock has really made a round trip since some of those high-profile bankruptcies in October, really casting a shadow over the private credit space. What do you think that was all about, and how concerned are you that the volatility and the reputational headline impact could resurface?
Yeah, I'm not concerned at all. It was a bizarre coincidence that you had three individual instances of fraud and credit challenge in the market. So I'm not surprised that people took notice. I am surprised that people very immediately went to, there's deep-rooted credit issues. I think once everybody took a breath and did the work and looked at the earnings coming out of the private credit space and saw record low non-accruals from the large managers, bank earnings where you saw charge-offs at 60 basis points, flat to down year over year, credit card delinquencies, moderating. I think everybody understood that this was an isolated incident. But look, it's the credit business, so it's a good reminder to people that underwriting matters, manager selection matters, and there's going to be losses. That's part of the business.
And speaking of that, the Bank of England is launching stress tests for both private equity and private credit, of which you will be a participant. Ares will be a participant. How do you see that playing out? And do you think regulators in the U.S. ultimately engage and embark on their own stress tests for private markets?
I don't know if it's going to be a formal stress test in the U.S., but we spend a lot of time talking to regulators and legislators about the role that private markets play in the broader ecosystem. If I go back in time to the GFC and I think about all of the conversations that we were having with the Fed and the SEC and Congress, there was just not as deep of an understanding of the symbiosis between private markets and public markets. I think we've all made a lot of progress just through constant dialogue and education over the last 17 years, where there's a real understanding and transparency. I think this B of E process is going to be fantastic for the industry. I think what it's going to show, private markets are a critical component of the modern capital markets. They are driving growth in the middle market economy. They are smoothing volatility in the liquid markets, and it's doing something structurally to better distribute the risk out of levered financial structures into unlevered institutional funds. So we're actually participating with great enthusiasm because we think increased